It's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Nigel has hopped across to the wall to tell us about the metal sector and what you can expect. Nigel, over to you.
Well, that's right. For the metal space, let's break it up into ferrous, non-ferrous, as well as miners. Now, the ferrous space, the EBITDA will see a sequential weak showing because of pricing as well as volume. While the EBITDA of the non-ferrous companies, well, it will increase because we've seen a sharp surge in base metal prices. For miners, we could see a bit of mixed trends that play out. Well, let's take the ferrous space first up. The EBITDA is likely to decline by around 5 to around 13% because of lower volumes and lower flat product prices. But all companies will see at least a $10 to around $25 per ton benefit because of lower coking coal cost. Volumes, well, they are likely to decline across sectors. That's in the range of around 1.5 to around 15%, with SAIL reporting the highest decline. Let's turn our attention to the EBITDA per ton then. For ferrous companies, well, they shall report a bit of an improvement in the range of around 100 rupees to around 800 rupees per ton. But JSPL, that's the outlier. That's expected to report the highest uptake in the EBITDA per ton because of the uptake that we've seen in long product prices. Also, in addition to that, there's going to be a relatively lower decline in volumes, and JSPL will also get some benefit of captive thermal coal, which will kick in. On the flip side, though, Tata Steel's EBITDA per ton for the India operations, that will decline because of adverse operating leverage. That's about the ferrous space. Let's turn our attention to the non-ferrous producers then. They are likely to see an EBITDA uptake because of the improved LME prices. Vedanta, that's the one to track. It's likely to clock an EBITDA uptake of around 16% on a sequential basis. That's going to be driven by higher zinc as well as aluminium prices. It'll partially be offset though because oil has been a little bit weak and the oil and gas volumes on the whole have been a little bit weakish. Now, Hindalco's EBITDA is likely to see a 14% sequential growth because of improved aluminium prices, which are up by nearly around $300 to around $330 per ton sequentially. But that will be partially offset because in the previous quarter, the copper profits were much higher. So partly offset on that front. Novelis, though, will be crucial to watch because they are likely to report EBITDA per ton of around $525 per ton, which will be 10% higher on a year-on-year basis, but a little bit lower on a quarter-to-quarter basis. Finally, let's turn our attention to miners. We'll like to see mixed trends as NMDC's EBITDA per ton can increase by nearly around 19% on a year-on-year basis because of the sharp uptick we've seen in pricing, which will be partially offset by lower volumes owing to that miner strike, the worker strike that we saw in May 2025. Coal India's EBITDA, well, that will decline though by around 7% year-on-year because of lower realization from e-auction, partially offset by higher volumes. And finally, GMDC, well, they shall post a bit of an EBITDA decline because of lower realizations, but that as well will be offset because volumes could improve. They had reopened one of their mines, which will help them on the volume parameter.
Okay, got it. So basically, ferrous a little subdued, non-ferrous firing away, and the miners not so bad. In a nutshell, yeah?
Well, that's right. That's right, Surabhi.
All right, you come right back, Nigel, because we're going to take this forward with Amit Dixit, who's been tracking the metal space for such a long time. He's with ICICI Securities. Amit, great to have you on. So let's start with ferrous first, where Nigel told us that maybe it's not going to be the hottest quarter in terms of, volumes and the way spreads will shape up. What is your sense? I mean, how bad could it be really? And is this just a one-quarter blip? What's your view on stocks? Ferrous first.
Yeah, hi. Good morning. Hello.
Yes, Amit, we can hear you.
Yeah. So the way we look at the ferrous space is that what we have seen is a dichotomy between HRC prices and long prices. So HRC prices have been on softer side. In fact, April and May were good months, but June saw a little bit of decline. In case of longs, although headline prices look very strong in the quarter, but it was only limited to rebars. The other longs, such as wires, beams, channels, etc., didn't show that much increase. Now, most of the steel companies, they don't sell only rebar. They sell a mix of all these products. So therefore, to that extent, the increase in realizations would be relatively muted. In fact, we expect that there would be a flattish increase in realizations. Of course, the realization would go up the highest for JSPL in our view because of its exposure to long products and SAIL. Having said that, coking coal prices come as a respite, although the big benefit in my view would come in Q2. So coking coal prices, as per our estimates, will be lowered by $15 to $25 a ton in this quarter, and that also depends on company to company. So all in all, what you will find that the EBITDA per ton, if I compare it with last quarter, and last quarter, mind you, was Q4, where typically volumes are the highest. So there is a little bit of adverse operating leverage in play also over here. But having said that, volumes of JSW Steel and SAIL are likely to remain flat QoQ, while those of Tata Steel are expected to decline a bit, mainly because of certain one-offs in last quarter and the fact that they don't get that much advantage of lower coking coal prices being integrated, partially integrated. JSPL is one of the companies that will show the highest bump up in EBITDA per ton.
Okay, all right. Hi, Amit, and good to see you and good to speak to you after a while. From the ferrous pack, what's your preference at current prices? Give and take everything. The volumes, the backward integration, the changing mix. At current reckoning, which is your pick?
So ferrous space, our preference is actually, if you ask, number one preference is Jindal Stainless, and the reason being that if you look at the volume uptake, that is going to be the highest over there. In fact, the volumes from Q4 would hardly go down. So Q4 volumes were the highest, and in Q1 we will see around the similar volumes. EBITDA per ton is going to go up for Jindal Stainless. So therefore, what we expect to see the improved performance, and going ahead also, because of a converter-based model and nickel prices forming up, we expect to see EBITDA per ton moving to that 20,000 per ton range. After Jindal Stainless, our preference would be JSPL because of the traction we have seen in longs, and after that JSW. So these are our three picks in ferrous space.
Okay, got it. Okay, so we have JSPL as well as Jindal Stainless. Both those two you like from the ferrous pack. What about on the non-ferrous space, Amit? What's your view on Vedanta? People are getting a little bit cautious that promoter entity came and sold twice. Now there could potentially be a QIP. But Mr. Agarwal knows that his stock price has moved up. Why do be, dependent on banks? He's saying, let's take some money from the equity markets itself. What's your view on the non-ferrous space and particularly Vedanta as well as Hindalco?
Yeah, so starting with Hindalco. So in case of Hindalco and Vedanta, both of them will benefit from the firm LME aluminium prices and of course, zinc prices. That is more relevant for Vedanta and Hindustan Zinc. So what we expect to see that in case of Hindalco, the aluminium EBITDA would go up. However, in Novelis, we expect that because of firming aluminium scrap spread, we would see that EBITDA per ton would be down slightly QoQ. So in case of Hindalco, we expect that EBITDA would go up by around 11% QoQ. Now, in case of Vedanta, what we see that it is the biggest beneficiary of base metal, of the surge in base metal prices, because its exposure to base metals is highest not in India but in the world. So clearly, base metal prices going up benefited, but alumina prices also going up in tandem actually might be a little bit of a disadvantage to the aluminium division. Having said that, the higher LME prices would kind of negate all that, and we would expect to see a good performance. Now, on the zinc front, yes, of course, we would expect that because of LME zinc prices also firming up, things should be great over there. So Vedanta, I think, is in a purple patch as far as this quarter is concerned, because not only prices are supporting, but also volumes are ramping up, particularly at aluminium and zinc.
So you're positive on Vedanta at current levels or not? At 450 rupees, it's going to be the biggest beneficiary, as you said. Vertical wise, you have different opinions. But at 450 rupees, would you be a buyer?
Sorry, Nigel, we don't have Vedanta under formal coverage, so I can't give a recommendation on this.
Okay, then give us at least a rough valuation, because they have been talking about selling that steel division. And Mr. Agarwal is expecting the mool. When he spoke to us, he was talking about very, very high valuations. He said, if I don't get a buy, I'll continue to run it and expand. But if you had to give it a valuation for that 1.5 million plant that's moving all the way to 3 million, what should the rough, realistic value, according to you, that they should get?
See, again, it depends on the market, depends on a lot of factors. Having said that, I believe that the real valuation of that steel plant will not be 1.5 million tons. It would be when Vedanta would be closer to 3 million tons, because 3 million tons is an optimal size of any steel plant of that particular product profile. So, in fact, for a 3 million ton plant, well, we are seeing the valuations, in the, I would say, the containment Naganar is also on the anvil, and we are kind of hearing some kind of valuations over there. Having said that, in case of Vedanta, if you look at it, assuming that it's a 3 million ton plant, I would value it somewhere around, I would say 700 to $800 per ton in the current scenario.
Sure. Thanks a lot. Thanks a lot for joining in.